morning. All right. Let's get Misty and Mr. out there for you. Okay, what's happening? What happened on our Thursday? Well, we closed down 4.8%, right, on MSTR. Let me show you a chart. I think that will help a little bit. Whoops. Why did it go to a new... That's not what I was trying to show you. Let's pull this one over here. All right. So what we really got is just kind of a consolidation going on here, right? So almost right between the lows here, 15, low 15s, right up to 17s, right? So we're just kind of consolidating over here. We had a little mini inverse head and shoulders where you see the inverse head, right? Because if you flip this around, it would be a head and shoulders, which is turn it upside down is a negative pattern, right? And which is a bearish pattern. This is a bullish pattern. So we're almost coming back up to this next shoulder and consolidating over here. So it's just a question of when we break out. And then this is going to measure a lot higher, right? This is going to measure, 2,400. So that would be a significant, and that would require, 95 to 100,000 on BTC. And remember, Mr. generally tracks. Now, there wasn't a lot, liquidity in the markets can drag down Bitcoin and drag down Mr. and coin at different levels, right? So let me look again what I have on BTC. Yeah, I'm still showing 67,860. So it was only down, 1.2%. But if you look at Mr., it was down 4.8. So these things do vary, but they do track the level. But again, it's the yin and yang. I think the real positive out of this scenario is this helped us win our weekly, right? I mean, there's no question that as we said here, and I'll jump into that in a minute. So there were people buying into the fund, and honestly, if you own Misty and you own Coney, it became clear that Misty is going to pay more than Coney from what they've been able to do this month, right? So I know I reallocated, and I don't normally do that. I don't run out and go, Misty's going to pay 50 cents more. But this month, I just felt like Coney had an exceptionally low one. I mean, it could come in at $1, right? It's been $1.07 and something else before. And so I just reallocated a bunch, sold Coney, and I didn't sell it all, but I sold a big chunk of it and moved it over to Misty. And then I also took some other funds and bought into GDXY and really loaded up recently on YBIT. Now, you guys do whatever you want to do. You do you, and I do me. But I always try and tell you some of the things I'm doing. I hate to have a great win in something and not be able to share it, right? So the 4 funds I'm doing, I own all those. I still own a little bit of Ulti, not much. But I'm not doing Ulti. It's just crazy to try and really show you every single trade, and just by the nature of that fund. And I really just tried it out to see if they got their act together. I don't think it's quite where it may have stabilized, but heck, stabilizing in the 14s. I mean, that thing started at 20, right? Thank gosh, my first shares were 16, right? And like I said, I have a very small, relative to my other positions. So anyway, so down 4.8, down to 1541. Well, that's right where we are at our synthetic, right? And then we moved down 4.12. So not as much, because we've got the cushion of collecting the weeklies. So what I did, and I always do, is I differentiate the color code. Sometimes late in the week, they'll put one trade in, but as money flows in here, and where does money come from? Well, it comes from shares being added, right? This was a big 475,000 shares, so that was over 10% of the outstanding shares increased, right? So they went from 440, by adding 475,000, right? That's a big amount, right? I think it was 11% at the time. So, and then we added 50,000 yesterday, then we added another 75 here. Because obviously this is going to be one of the higher yielding funds. I mean, I haven't kept up with NVIDIA, which is really as far as the stock, right? But the problem when you have that scenario where you have an NVIDIA, I mean, if Mr. went up 20% in a week, there's no way we're going up that level, right? We would have been capped on our weeklies and we would have made it on the synthetics, but we would have lost a bunch of capital having to buy back those synthetics. And I think that's pretty much, without looking at everything on NVIDIA, that's another big paying and popular fund. And they've been the rage in the news, right? Because anybody that owned the stock has done really well. Well, the question just becomes, when do we slow down on that FOMO? I gotta believe this is pretty much near the highs for, through the summer period. It will probably go down significantly in September, and then they could go on another run. I'm not saying it's over by any means. I'm not the sky's falling, Chicken Little in 1929. Who knows, in 5 years could that come? I don't think so, but we'll see. All right, so 4.8, 4.8 and 4.12, 75,000 shares came in. So what did they do? Well, here's what they did, right? I've been starting to share these with you. And again, when you see three rates and you start with a buy and sell short, and you look that it's a synthetic, right? It's a 1540 out on July 19th. And then the last 15 is a sell short, a weekly call. Obviously, on a Thursday before Friday, they're going to go out a week. And it's exactly what they did, right? So let's look at what those did, right? So they sold an 1800. Now, this was much higher and earlier in the day, right, when they sold the 1800, and they went from 1618, ended up at 1541. So we're now setting 16, almost 17% out of the money with 6 trading days, right? All of next week and 1 day this week. So that looks pretty good, even the 770 for next week, right? So these, you can't use these numbers anymore because this is at the time, right? So it's much better, and that's why I do the weekly the way I do it. Let's come over here. They're color coded. Now look at our breathing room with 1 trading day to go, right? We reflect where we closed. So with 1 trading day, 885 was our, when it was 1681, I'm like, come on, baby, don't go past 1720, right? And I know some people, anybody listen to Jay, I did, Jay Petroselli, the CEO of Zega Financial. So again, anybody that doesn't know this is education purposes. You guys that are really into Max and everything, you know who Jay is, and you probably watch an interview or two. So what Jay talked about was open questions on another YouTuber's show, right? On a guy called The Coach. So, or he calls himself The Coach. So he had Jay on, very entertaining, very smart guy. Love Jay, right? And he's very articulate. He knows how to communicate this. He knows options cold, right? He's written a book. Really, really smart guy. He was talking, and my only point here is somebody asked the question, and I forget exactly how the question was worded, but he said, hey, sometimes you lose on these weeklies, but you're winning on the synthetics, which I talk about a lot, and I call it yin and yang. And he said, well, we intend to allow the earnings, even though they took a loss, right? We want the fund to know that we're going to give them credit for the time decay. So what he really means is, listen, I bought this, I sold this call and I got, $20. I had to buy it back at 40 because the stock ended up, the underlying ran way past it. But if we have to use return of capital, we intend to keep this fund trying to pay out at the implied volatility. Well, take that with a grain of salt, because you can only do that for so long, right? Look at Tesla as a prime example. Because if you're always losing, well, I take that back. If you're always losing on the weeklies, it means the underlying is running. And if you position your synthetic right, you're going to make all that money on the synthetic. But what nobody really talked about is you need to sell or roll the synthetic out of a paper profit into a real profit to fund buying that back. I think what Jay was talking about is more about, we're going to use both sides of the coin to pay out. And this is what he's referring to. This is a perfect example, right? We're losing on our short calls, right? We've had to buy back some huge short calls that hurt us in May. So we're making a lot of money on our synthetic, right? So when we run up, we make it in the synthetic, we roll, and then we run past to where, this is a loser. So what he's really saying is this $4, almost $4 over here, we're not afraid to use that, right? So you got a $3 loss and a $4 gain. I'm rounding, right? So I'm going to pay you $1. Well, if the IV is high, which this one is, it's at a 412 payment and a 252, we're going to take some money. If we have to take it out of treasuries, we have to take it out of something, return of capital. And whenever that's actually better for taxation purposes. Again, now I'm going to educate you, so bear with me. For those of you that don't care, skip forward. What does return of capital mean? Many of you know it means we're going to pay you money out of the fund that we got sitting in treasuries. Whose money is that? Well, that's your money that you use to buy in the fund, and we get 4 to 5% annually, right, which is nowhere near enough to pay you this money. We get the money out of synthetics and out of weeklies. But if we have to, and we don't have enough to pay, we're going to pay you. So even when Tesla was getting killed the other way by going down, 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 they were still paying, right? But in that case, you're losing it in your NAV, right? But as they have to dip into the NAV, that's what's going to happen. The NAV is going to take the hit, right? And so if you bought in at 35 and all of a sudden you find your value's 26, you're like, but I'm still getting a good return. So that's not the preferred method, but they're not going to let the fund not pay out any money. Essentially, that's what they're saying. They could, reach a point. But just occasionally, it's okay when you have a bad week or a bad month. So there were a lot of things said in there that are very deep that I think are over the head of a lot of people. Why is return of capital both good and bad? I told you why it's bad, because eventually it comes out of the NAV, right? If you use money out of the treasuries, then you're collecting less interest. That isn't where, but you have less capital to deploy to buy new positions, right? So what return of capital, why is it better in a tax sense? Because of, and this is a taxation thing. So everybody in America and even Canada and other places, the issue if you're Canadian and some of these other countries, your governments, okay, the U.S. will withhold tax, right? And for us Americans that own these funds, yield max, we don't get any tax withheld. We could choose to have tax withheld, but that's more of a, you do that with your IRS and that. So what happens is the way these are taxed for U.S. folks, these are not qualified dividends, right? Now, those of you in a 401k don't care, or a Roth IRA, right? Because you're earning these. And I have some money in an IRA, some of my MSTY and Coney and yield max is held in a tax deferred, some of it's held in a regular account. So the ones that are held in a regular account, you're taxed at ordinary income on these distributions. But some of the distributions in the course of the year can be called ROC, return of capital. So the way that's treated from a taxation standpoint is the portion of the payout, and they'll tell you in their paperwork that gets filed online, right? This payment was, $1.02 was return of capital, and the 50 cents or 48 cents were distribution. So what it does is you're not taxed on that, right? It's called a return of capital. And how it's treated, so you're not taxed on it, super positive, right? 401k doesn't change anything. But in a regular account where you're not taxed, you ultimately lowers your cost basis. So if I bought MSTY and my acquisition cost, my average price on all the shares I bought is $26, and I get $1, let's say I got $1 worth of distribution as return of capital, then my cost basis gets lowered, right? So my cost basis is now $25 instead of 26. So when I go to sell it ultimately, then I have a bigger gain potentially, right? So the $1 comes back as return of capital, and hopefully I've held it for a long period of time, and I'm only in like a 28% long-term capital gains tax bracket, right? So it's complicated, but I wanted to spend the time for anybody that wants to understand what return of capital. And what I would say is just constantly look out on the funds information. Like if you go back in Tesla and some of the longer funds, you can find where ROC was mentioned in the payouts for them over time. I don't believe MSTY has been in that situation and wouldn't be in that situation now. They can just borrow from something, but be aware of that. All right, let me get through the main stuff here. Let's go over to the weeklies. We talked about that. We look super good. Even on these guys, right? We look good. So we've captured 87% of all 5 of these, which is amazing. And all 5 total 2.9. Well, you can see that these are very small. They're not much money into the following week. They're just reflecting a few shares being bought the last few days. So when we go to holdings, we can see this. So our 2.6 million at 885, right? It's 1720. They're saying it's worth $3.35. Well, it's almost worth 0, right? I mean, that's the true closing price from yesterday. But think about that. When you're trading down at 1541, you're quite a ways away. So they're going to buy that back for a penny, right? We're 89% captured at $3. So we'll capture all that. We'll very likely, if we can capture the 1720, these are minor, right? 32,000, 124,000. But we're 92 and 93%. Why? Because they're even higher, right? These guys are very high, but they got 6 trading days. And they're not much money yet. So we'll roll this tomorrow, and we'll get our new number. Okay, so that's what I got for you. These are all updated. This isn't in, well, let me do one more thing, and then I'll talk to you about fair value and what we closed at. 75,000 shares, right? The old number was 4925, so we got 75 and we used that as a divisor and we moved up 1.52%, right? So our total outstanding money on all of these is only 372 on 2.9. So we'll get our 2.7 million, right? Easily, right? 275, if you will, is the portion of just this week. Now, what's not good, but it's, you know, the yin and the yang. If you drop way down, your weeklies win, right? But you go down in your synthetic. We're still profitable, but look at the drop. We were 14.1, 14.1, 9.315, right? That big 100-point drop. But I don't worry about that. That's 719, right? We got quite a ways. We got, 6 weeks worth. Not an issue, but just pointing it out. All right, so that's our weeklies. That's our holdings. Here's the actual trades on the synthetic, right? Now this increases our loss. We got a gain down here altogether, but we have some losses when we put on new trades. Why is that? Well, we were still above it when we sold these. We were probably 1,600, 1,580, because you see these going up. We had to sell, we had to buy the call for 287, right? Because we were in the money, right? And significantly more when they put this on. And it cost us 431,000, and then we sold the put. So we don't get that much money for the put. It's only when you're way above these things, right? When you start getting down. So the net result, when this number goes in here, and I go over to my payments, right? I've got a lot more involved here, right? So let me make sure. Oh, that's my, yeah, it's here. So the 1540 that I updated, I'm showing 24, and I'm using down here, and this is where I go pick up the new number. Now, sometimes I change these spreadsheets up, and especially when they roll, somebody roll like 3 or 4, right? I think it was Cody. Cody that went 220s, 230s, 250s. So you're jumping around adding all these new ones, guys. We do a lot of work when we track this at this kind of level. But it's to benefit you guys. I want to know it, and I don't mind sharing it. It's great when I get monetized, so keep subscribing, keep liking, guys. I'm almost there, right? Loving it. So I don't intend to slow down or not do all this. So final, let's go here, because I know this is long in the tooth. So where am I at? I dropped the 220 and said, I think they'll end up making us whole and pay us a couple bucks, but I don't think they're going to go over that, right? This counts us winning the weekly. There is no question in my mind that weekly is won, right? We can't really get any more synthetic. I mean, we can go up. I'd love to see it. So ask me what ideally for all of us is we run right back up to 1720. Now we've got 15 million or something, 11 million. And this, now it's still a paper profit, right? It's not an actualized profit. But so what? We can actualize it or make it real at any point by rolling. So that's a good thing to have. So we really want to just go right back up. And honestly, although this chart isn't showing all the consolidation because I didn't update it, but very likely that's probably what we'll do. I mean, if the markets don't hurt us themselves or BTC, we'll probably go up 50 or 100 points and go right back up to low 16s. So that's what I got for you. The best thing I can say here, I'll do a final prediction, right, on the weekend after Friday's closing. That'll be 99% accurate, right, as to what I think they're going to do. And honestly, I give a range because that's what I think it's got to be within that range. So I think they'd love to pay us $2, but we need to execute, right? We don't want to see this. This won't change, but we don't want to see this thing drop to, 1400 from 1541. That's not going to hurt our weeklies at all, but it's going to hurt our synthetic, and we don't want both hurt. We've already taken a hit on a short call. Okay, let me let you get out of here. I got more videos to do this morning. All right, so Bruce out. Again, not financial advisor. This is not financial advice. Always seek financial advisor before you make investment decisions. This is for fun and entertainment. Okay, guys. See ya. Bye.